Okay, good morning everyone. I'm going to be delivering the briefing today. It is the 26th of January, the final trading day of the week. So what we're going to be discussing today is some of the price action we saw yesterday following the ECB meeting, then what we saw overnight with regards to some of the commentary coming out from Donald himself. Some of the trading opportunities that presented themselves, and looking at the day ahead, we have a number of key data sets coming out from the UK, including the GDP numbers, which are holding forever more significance given the arguably deteriorating economic conditions in the UK following Brexit, albeit the currency pair really isn't showing that just yet. So we're going to start off by having a quick look at the charts. And if we start with the main mover yesterday, which was the euro. So having a look at this chart so far, it doesn't really look like much happened. It looked like a bit of intraday volatility. But as we know, we had the ECB rate decision yesterday where all rates were kept on hold, which in itself wasn't the driving factor. It was more to do with some of the hawkish commentary or the lack of dovish commentary coming out of Mario Draghi, given where the euro is trading. And now we've been tracking this obviously for over a year now, and this continued strength in the euro versus the dollar. What people were starting to expect is, yes, the eurozone was recovering. However, there would be a point where Mario Draghi would like to speak this euro down, as it would start to have negative effects on the growth outlook for the eurozone. And as we'll discuss later, of course, it's quite important to either strengthen or weaken your currency, subject to what you believe conditions are going to be like. So there was no such commentary. If anything, he did mention that some policymakers were uncomfortable where the euro was, but the reason that didn't elicit any market reaction was more to do with the fact that this is exactly what he said last time. So relatively to his previous comments, nothing really has changed there. So just to go over some of the key headlines which ran during the meeting, President Draghi said that incoming information confirms a robust pace of economic expansion, with growth accelerating more than expected, and reiterates that he expects rates to remain at present levels for an extended period of time and past the horizon of net asset purchases. So this is just the copy-paste that you see quite often from meeting to meeting, changing only one or two words in between. But once again, he has been quite, what would say, bullish about the economic expansion of the eurozone. However, with regards to inflation, Draghi noted that domestic pressures are still more muted. Recent FX volatility is a source of uncertainty, and underlying inflation will gradually rise over the medium term. Whilst he also reiterated euro area outlook broadly balanced and could present upside surprises in the future. So euro area doing well, however, muted price action, but over here he said gradually inflation will rise in the medium term. So all in all, this is where the market basically focused and said that he hasn't shown much concern about the value of the euro, and any mention that he did do was similar to his last meeting. So given the fact that the euro has rallied so much, no renewed worries in his mind. This allowed the euro to rally quite sharply, and there were some great trading opportunities. The stage 2 guys and the stage 3 guys definitely making the most of this opportunity. Ryan, a quick shout out to you for getting into this trade, taking away some profit and then walking away, which is exactly what we like people to do. The move generally lasts for about an hour. This is once you have your rate decision, your first summary, then your first few Q&As. But then after that, volatility seems to be high, but there's generally little direction. So get involved and then just learn to walk away from this trade. This was quite a violent break here. On the futures, it was a 125.380, which was R1. But actually, it seemed that this coincided with the cash, the spot market of 125. So when this broke, it broke quite violently. Some stops being run here, and a sort of blip higher. And then what we saw was market volatility start to die down. Sound like quite a hawkish event. However, one thing I would say is the euro dollar finished down 0.06%. And now why was this? I'm sure you guys have read overnight. It was Donald Trump's comments regarding the strength of the dollar. If we flick over to the news article, which was ran. Trump says dollar to strengthen. Mnuchin comments taken out of context. So as we knew the day before yesterday, Mnuchin was talking about the weaker dollar helping the US economy, and being the US Treasury Secretary, it was quite significant for him to be able to say something like this. But Trump, however, comes along, flip-flop policy as usual, The dollar is going to get stronger and stronger, and ultimately I want to see a strong dollar, sounding just as much of a toddler as he always does. Over here, however, I just feel if we take the economics out of it and just have a look at Donald Trump as a character, as Anthony was just mentioning earlier, that weak and United States shouldn't be put in the same sentence. And the fact that, you know, everyone knows that equities are ramping higher, and he sort of milked that for all it's worth. I'm sure he's going to continue to milk it. But what he has been seeing run in the headlines quite regularly is the dollar's weaker, the dollar weaker, the dollar weaker, and the dollar weaker. And I'm pretty sure he's unhappy about this. So, you know, basic economics basically saying the dollar's going to get stronger and stronger, and ultimately wants to see a stronger dollar, I think, is him just trying to fight back against some of these people who are saying the dollar is becoming too weak. But really, there's nothing he can do about it. Yes, we saw a blip in dollar strength when this comment came out. So if we go to an hourly chart, we can 15-minute chart, let's do the job. And we can see that this was the dollar weakening as the euro was rising following the not dovish ECB meeting, and this is now the dollar strengthening on the back of Trump's comments. Now if we transition to the chart, this means that the euro USD just reversed all of the gains it made during the ECB meeting. However, if we look at where the market is trading today, we're seeing the dollar continue to weaken. If we go on the euro US, the dollar index over dollar index chart. So once again, we're starting to just see that dollar weakness prevail. Market sort of bounced, and dollar weakness sort of persists. Now the reason the dollar,
so obviously one of the main events today will be
is continuing to weaken, I think, is really well sort of panned out in this Bloomberg article, which I'd encourage everyone to read. A doomsday guide to the dollar and why it could keep plunging, and just looking at some of the technical reasons behind why the dollar continues to weaken. But what I wanted to look at here was mainly this chart here. Everything else is stronger against the dollar. All major currencies are now stronger than the dollar. The people are buying other currencies versus the dollar. So Donald Trump's comments, yes, can cause some short-term volatility, but I think the trend is your friend. As the Eurozone continues to outperform, all metrics are improving across the board, then I would expect to see the dollar to continue to weaken. Just having a look at some of the other headlines which were run yesterday. The third and last thing to say about the ECB meeting was shortly afterwards, the policymakers would be quite spooked at where the euro is trading, and so the spike in the euro, ECB policymakers split on the next move. Some people went on to say that they were looking for forward guidance to be changed in June of this year, as opposed to what the market is expecting at the moment, which is March time. So this obviously would then weaken the euro, as well as this is delaying the change in forward guidance, which in itself is obviously the stimulus package. So moving away from the euro, we're seeing other markets such as the equity markets. The DAX here underperforming, understandably, given the recent euro strength. The euro strengthening just weighing on the DAX, but to put it into context, if we put it onto a daily chart, we're still pretty much up at these all-time highs. Not something I'm particularly worried about. It is getting cheaper and cheaper, and once the velocity of this euro-dollar move higher sort of subsides, I'll be expecting to look to go long this equity market. Sam will be on shortly just to discuss some of the more technical traits. Whilst on the DAX, I want to discuss some of the price action we saw about 2 days ago, which I think was a great thing to notice, and it was a great trading opportunity as a whole. A few days ago, when we heard from Mnuchin regarding the euro-dollar EU6, about him favouring a weaker a weaker dollar, we saw the euro-dollar quite a robust move to the upside. So the stronger euro should have been weighing on the European equities. But if we took this all together and had a look at the Dow, for example, what we saw all day is that your US equities are all-time highs. So on one hand, you've got the stronger euro weighing on European equities. On the other hand, you've got US equities rallying, indicating sort of a global risk on, as we've been seeing. So this resulted ultimately in the DAX just being relatively range-bound. Then what we saw, flicking back to the US charts, was a bit of profit-taking at these all-time highs. This profit-taking sorry. So just having a look. This was the euro we were discussing. This was the US equity, and this is the DAX. So the euro over here rallying. No, wrong one. Euro rallying. The DAX was pretty quiet, just being dragged up by this US equity. But when we saw profit taking the US equity, the perfect storm sort of brew. So now we've got US equities coming down. We've got a stronger euro, and this is a time where you want to be pulling the trigger on products such as the DAX, really looking for a green light across the board, as opposed to just going off the fact that the euro is stronger, therefore the DAX will go lower. So that was quite an interesting move to keep an eye on. Talking about equities, once again, we can turn to your US equities, and no surprises, once again, all-time highs printed day in, day out. This doesn't seem to want to stop anytime soon, and if the dollar does continue to weaken, then there's no reason for these US equities to start coming down anytime soon. We're seeing US earnings gone really, really well. The likes of Caterpillar sort of beating expectations. This is a trend line that Ed identified in Trading Live the other day, which I still think is very powerful and worth keeping an eye on. And you can see really good way to identify sort of where to be looking to take profits each time this market pushes up. But buying the dip worked very well yesterday. If anybody did go long the Dow yesterday, there was the opportunity on the pivot on the pullback. In hindsight, it looks like a very easy trade, but if we look at how we reached this level, it was a bit uneasy down here, coming down quite fast, then coming in for a second test, third test, fourth test, before finally finding support. But you know, buying the dip is still the better trade to be taking on. No reason for US equity to be going down, at least in the short term. And if you are doing the profit taking trade or following the short term moves lower, then definitely be getting in and out quite quickly. So just before I hand over to Sam, let me just get the calendar up, which is here. We have 9:30. You have your GDP preliminary numbers coming out of the UK. So having a look at this, we're expecting consensus of 1.4%. The previous was 1.7%, so this is the GDP expecting the economy to be shrinking here. And if we look at it, 1.4 will be the worst number in over a year. If we go to a 5-year chart, not the best chart here. Basically one of the worst readings we've seen since, in terms of the downtrend as opposed to the recovery phase, back in 2008. We did obviously print 1.4 as the economy was recovering post-financial crisis, but in terms of the economy shrinking, the last time we shrunk down to this sort of level was really back in 2008. So not looking good for the UK economy. Obviously currency-wise, you're going to be wanting to trade cable on the back of this, and we've seen quite a bit of strength in cable. So if we see a number sub 1.4, then that of course will give you some good opportunities, given the fact that cable is quite elevated given the recent dollar weakness. In terms of upside, I think this will be a very interesting number, because the upside we've been seeing in cable is due to dollar weakness as opposed to sterling strength. So if we do get a healthy number here, if we maybe keep GDP growth rate stays at 1.7% as last time, that's quite a big beat on expectation. So I think there is room for both upside movement, as the sterling has room to appreciate, and downside risk, as sterling or pound is quite expensive against the dollar at the moment. So this is going to be quite an interesting data set. So you got your year on year and your quarter on quarter. Given the fact that we're trading well past 12 months since we decided to leave, I would feel that the year on year will be the more important one, but then closely followed by quarter for quarter. Coming into 1:30, we have a whole host of data being dropped at you all at once. Now this is going to be very, very eventful. But as terrifying as all of these data sets looks to you or me or anybody else, this is every single trader is going to be trying to digest all this information at the same time. So expect the initial move to be quite choppy. People deciding where to focus. The algorithms will definitely have the advantage here with their binary approach, algorithmically deciding which data is more important than the other. So more so than usual. Be very, very careful in your 130, but even looking at this data set, we can start to eliminate a lot of the unimportant numbers, or more importantly, identify the important numbers. So GDP advance from the United States. This is the GDP, the strongest economy in the world. Of course, that's going to hold a lot of significance. Following on from that, PCE price advances. The Fed can talk about how it's their preferred measure of inflation, so definitely be keeping an eye on PCE. Wholesale inventories will then come as your tertiary importance. Canada inflation numbers. So if you guys are trading the CAD, of course, inflation. What we're doing when we're trading in the currency market is basically pricing in expectations for monetary policy intervention or stimulus or the lack of it. So CPI numbers, of course, from Canada, if you're trading the loonie, will be the most important one. But generally speaking, if you see that the CPI is, let's say, above expectation, expectation minus 0.3%, if that comes in higher and you expect the CAD to appreciate, but then you also see strong GDP numbers, it could get very difficult to trade the loonie. If anything, I'd say we have the CAD data and the US data coming out, so unless it's all very unilateral, I'd avoid the loonie. If there's any contradiction between the Canadian numbers and the US numbers, looking to avoid that would definitely be the right option. Okay guys, so that's the wrap for sort of the price action we saw yesterday, what to expect going into today. I'm going to hand it over to Sam, who's going to talk you through some of the technicals. Thank you very much. Have a good day. Excellent.
Yep, hi guys, obviously we've got a bit of data this morning, 9:30, so there's going to be plenty of time to do your own analysis. Just having a look here to start off with Euro. We'll have a look through the currencies before coming back down to equity markets, which look quite interesting actually this morning. A couple of potential setups. Euro, obviously we saw the dollar and last night around 7 o'clock really strengthen, and well, yeah, again the dollar index is down 0.5% this morning, so it seems short-lived. R1, if you can push above there, I think you really need to be aware of this point on Euro. I would absolutely say this is more important in terms of us pushing on. Would expect a bit of resistance, however, around there, but yeah, push through there, and you're looking at yesterday's highs. Back down towards the pivot, nice area of support, I would say now. You can see if we lower the time frame down once, twice, 3 times, test before we had that breakthrough, and the classic, obviously around 6 in the morning, but working pretty well there for the Euro. So that would be the favoured sort of trade, I would say, as things stand right now. Obviously data could mean that view changes, but for now, weaker dollar, I see a continuation of that. Just down, dollar index at the moment down, yeah, 0.57%. Cable, and I was just putting in the chat actually. Let me just get another chart of the 200-week moving average. Let me just remove the pivots here, just to clear things up a bit. Just modify that 200s. I mean, obviously, if this data comes in wildly better than expected, we could have a easy little bounce through there. So it's a case of fundamentally having the viewing. But from a technical point of view, you can see the 200-week moving average here, just coming to the top of that, around 144 at the moment, has offered pretty good resistance back in May 15. Probably worth keeping an eye on, whether that be that your bias is still to the upside, but you get a breakthrough here, we can start to have a look at 145 and beyond. But from a technical point, definitely something to be aware of. Naz, I've just seen you write in the chat, thank you Vas, and that has absolutely made my week, seeing you call Saif Vas. But looking back at the pound here, pivot very similar to Euro actually. That support point, I think that looks quite nice to potentially see a push on through, and you know, to the upside if we do continue to see dollar weakness or strength from the pound data. I think break above R1, there's a bit of room to go to yesterday's high, but preferring, I would say, a bit of a pullback to continue the recent trend that we have had. Dollar strength and breaks through these lows to target yesterday's lows is also a good sort of trade from a risk reward point of view. But I feel it's a day where perhaps the data could lead things off. Dollar CAD obviously going to kick on more around the half one, but just on S1 as at the moment. Again, I think for all these dollar pairs, I'm preferring a pullback and pivot for, well, definitely the first three that we looked at look pretty good opportunities to continue the recent trend that we've been in. Dollar yen, exactly the same. Pullback to the pivot. I know it looks probably quite obvious, so I would be careful around there for maybe a quick stop run. But if all things considered and we drift back higher, these would definitely be the trades that I'm looking for to continue this recent trend that we have been on. Pivot looks very good. You've also got another market-related level around there for all of those. See if Aussie dollar looks the same. Yeah, not too far away, is it? We can see that push through the pivot here, early hours, 6 o'clock, so same as that euro and pound. If we can come back to that point, looks quite nice, and you can always have your stop just below that pivot. So for the dollar pairs, as things stand currently, looking for a retracement to continue the recent moves. Equity markets, and I was just looking at these earlier. I was just going to go through the Dow and the Nasdaq. No, S&P and Nasdaq, sorry. Let's get a trend on here now. Obviously, you always want those free tests for a trend. At the moment, you can see here we just got those two. So what my thinking is, and it's very much forward thinking for now, is to see. Let me just get the ellipse tool. Is to see this be respected later on, come back down maybe after a cash open. And we have a look at the last few days. That cash open has been quite aggressive. So I'd like to see that respected and then look to sort of buy through there to eventually get a break on to new all-time highs, whether that be today or something later next week that I'll be focusing on. Same for the Nasdaq, just identifying. Let me just get this trend on here where it can perhaps find a bit of resistance, retrace to then go again, and it might be that the pivot later on is my sort of entry that I'm looking at, or the bottom end of this trend line that you can see here. So equities, obviously I'm still favouring the upside. Dow Jones looks quite more bullish in that respect, but I would even so have a bit of a trend line going higher. Price is starting to get squeezed in this morning. Moving over to the DAX, we had a bit of a push above pivot not too long ago, only to come back down, and as has been the case recently, been quite a choppy market to trade. Let me just see if we've got a trend line on here to be aware of. No, bit of a messy break. I think for the DAX, I'd let Euro decide really my movements for wanting to get in there. However, you can see this point, what was the low around the S1 yesterday, we then found resistance, so this would for me be a lot more important than the pivot is today. If I just adjust this line here, you can see just how important this whole area could be, and I've put that on the high of the day as well today, just to determine whether we do push higher or we sort of reside around these lows. Gold, we did find resistance, you can see here on this area in the market from last night where we found support before pushing on, and then obviously you had those dollar related comments around 7 where gold took a bit of a hit, but as has been the case across the board, the dollar weakened into this morning and to now. Just finding a bit of resistance here. I think if we see the dollar continue to weaken, a good opportunity is the break through this area that has been rectangled. Nice little target around here for your sort of first bit of that trade. So again, a couple of decent opportunities, and even the pivot, as with those currency pairs, looks quite good for continuations of the weaker dollar. Oil at the moment just slowing down a bit after getting to those highs of yesterday and obviously multi-year highs. Pivot from a technical point of view looks quite interesting. I think oil is a tricky one at the moment if you are looking to necessarily have a bias from the first thing in the morning. So I would let the market tell you what's going on, and it would be a case of when the volumes may be there, if you get a break through this level, you can sort of look to target up 65.84, and then you've got some nice points of the market that would offer good resistance closer up to the R1. To the downside, I think if we can break out this sort of range that we've been in, or the lower ends of the range this morning, break through there, and then $65 handle and the low of overnight works quite well. I think I would prefer to be, looking for a break. However, in oil, whether it to be to the upside or downside, I don't necessarily have a bias right now. It'd be a case of letting the market tell me what's going on. So in about 26 minutes, just over 25. You've got the UK data, so I'll let you guys crack on. Obviously, any questions, please get them in the chat. Nasdaq near the high of the day, Aussie dollar just coming off R1, and dollar CAD S1.